taking you through to that closing bell with a global simulcast. It started. Tim Stenovec is in the radio booth. Emily Gorfeo in today for Carol Massar, Alix Steel on assignment as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, as we close out what has been, Tim Stenovec, a very solid week for U.S. equities.
Yeah, one of the best weeks of the year for the S&P 500. We're solidly in the green on the S&P 500 year to date. And Emily reminding me a little earlier that we're up 19.5% from those April 8th lows on the S&P 500. So that was just like 5 weeks ago.
Right. And the market was still able to rally higher today, despite the fact that a lot of the economic data that we got showed consumer sentiment is pretty weak and Americans are expecting inflation to tick up higher.
Yeah, but so far that hasn't translated into the hard data showing that same kind of damage, right? So as long as that hasn't made that leap over, a lot of folks in the market are saying it's still time to sit back and see how it all plays out.
And it gets to this idea, though, too. I mean, when we talk about this rally, and I'm glad Tim, you brought up this, or Emily, you brought up this idea of this 19% rally off of that lows, of course, after having that effectively 19% drawdown from the highs on the S&P 500. We haven't round tripped just yet, but it is kind of interesting that this isn't necessarily being led by tech in the way that you would think it would be. It is a lot of the other sectors, right, Emily?
Yeah, I mean, that's right. If you look at the equal weight index, it's been rallying there as well. And also the Russell 2000 small caps outperforming both mega cap tech stocks and the S&P 500 today.
All right, well, on a weekly basis, tech is out front, as are the discretionary names, but all of the 11 S&P sectors in the green on a weekly basis. As for the day, you have the Dow Jones Industrial Average closing out up about about 328 points, or about 0.8%. The S&P 500 up more than 40 points, or 0.7%, while the Nasdaq higher by 100 points, or 0.5%. The Russell 2000 getting in on the action as well, adding about 19 points, or 0.9%. And we should point out transports and mid-caps also getting pretty strong bids on this day, up about 1% each.
This was a broad-based rally, at least in the S&P 500 today. You only had 56 names move lower, while you had 446 names advance on this Friday afternoon.
Yeah, so it's a pretty clear IMAP, too. Look at the 11 sectors in the S&P 500. Only one, energy, finishing lower by 0.2%. Otherwise, what's interesting here is that you have the defensive sectors, those that pay high dividends, healthcare, utilities, real estate investment trusts, and staples doing the best.
All right, let's go to some of the gainers on the day. An easy task to find these. I want to start with Charter Communications, up close to 2%. We could say 1.8%. The company has agreed to combine with Cox Communications. It's a cash and stock deal valued at about $34.5 billion. That does include debt. This combined company would be the top broadband operator in the U.S. It would increase Charter subscriber base by more than 20%. It would position them to better compete in this converging market where you have the wireless providers offering wireless service. You also have the wireless providers offering fixed broadband service as well. So it is a really competitive space. We just spoke to Craig Moffett over at MoffettNathanson. He reminded us the core product when it comes to TMT companies, it's no longer TV, it's no longer cable. This is all about broadband. Once again, shares of Charter today higher by 1.8%. CoreWeave finishing the day higher as well. 22% to the upside today. It more than doubled from its March IPO. This after NVIDIA reported its stake increased to about 7% of outstanding shares. This was as of March 31st. We learned this in a 13G filing on Thursday. NVIDIA was expected to have about a 5.2% stake in CoreWeave after its IPO. That was what the prospectus showed back at the end of March. And finally, look at what happened with Virgin Galactic today. Now, to be fair, the stock has been beat up over the last few years. Shares just soared today. It was up as much as 98% earlier in the session, closed higher by 43% to the upside, a record intraday gain. Analysts encouraged by the space company's first quarter results. They did say they plan to charge more for its space tourism flights when it resumes sales in the first quarter of 2026. They've got this new Delta spacecraft. It's going to hold 6 people, faster turnaround between missions. Then they'll clear this existing backlog of ticket holders in about a year. Also, they made about $460,000 for the first quarter. It was slightly above estimates. Negative free cash flow, though, expected to be between $105 million to $115 million in the second quarter, Emily.
All right, let's look at some of the decliners for the day. Applied Materials, this is a chip equipment maker. They gave a lackluster forecast for the current period, highlighting the potential cost of the U.S. trade dispute with China. So the company said sales will be about $7.2 billion in the third quarter, plus or minus $500 million. That was roughly in line with Wall Street estimates, but some analysts had projected as much as $7.4 billion. So that stock closed down about 5% today. I'm also watching shares of Hershey, the chocolate maker, was down 2.3%. Additionally, Mondelez was also falling as cocoa prices, which of course is a core ingredient in chocolate candy, surged to a 3-month high today on renewed supply fears as shipments from top grower Ivory Coast slow, and also dry weather threatens next season's output. So go and buy your chocolate right now, Romaine. Those shares were down 2.3%. And speaking of food, Cava was also down about 2.3% closing today. The fast casual chain reported first quarter results and updated their outlook, but analysts said that while the report was positive relative to peers, the dining establishment needed stronger results to justify the premium valuation. That stock is up a ton since going public in 2023.
All right, let's check in on yields here. Third straight week where we've seen yields rise, both on the 2-year and the 10-year. You see the numbers there. These are your daily moves. 3 basis points on the shorter end of the curve, not much on the longer end of the curve. But it should be pointed out, you go back to where we were in mid-April, towards the end of April, when yields were actually drifting lower. The big bump up ever since then, basically since the start of the month, certainly concerning. A flirt with 5%, of course, in the middle of the curve, in the longer end of the curve, and a flirt, of course, with 4% on the shorter end of the curve, 3.99 right now on your 2-year yield.
Okay. You know, this is a program that airs worldwide. We've got viewers and listeners all over, but our focus for part of the program today has been what's happening in the New York metropolitan area, given the strike, the first one in 40 years that we've seen. When it comes to New Jersey Transit, we spoke to Bill Maloney earlier, who typically takes him about 90 minutes to get in on the train. He had to drive to Hoboken from his home, walk from wherever he was able to park in Hoboken to get on the PATH train because he wasn't able to get on New Jersey Transit today. It's not just disrupting, though, people who are trying to get to and from Manhattan from New Jersey for work. It's also going to disrupt Shakira fans who are attending the concert at MetLife Stadium tonight, and it happened even last night as well. Real hiccups.
You know, Tim, I feel like you usually expect that if you're living in New York or you're in the New York City metropolitan area, there's going to be a little bit of traffic trying to get to MetLife for a sports event or for a concert. But our Bloomberg News reporting sourced a tweet here. Someone tweeted that they sat in traffic for 6 hours for that Shakira concert, which that sounds like a lot more than you would typically expect. And
they better get this sorted out
Shakira,
for the Beyonce concert next week. Beyonce starts her 5 concerts in the MetLife next week?
Yeah, the Beyonce concerts, Shakira folks got stranded yesterday. I mean, I don't know if you're actually a basketball fan, but apparently the New York Knickerbockers, who have, of course, sucked wind for decades now, actually in contention. So how are all those fans who don't live in the city going to actually get here tonight? They're going to drive in?
They're going to zoom in?
They're going to drive in?
Yeah, do a shared Uber.
No, but it gets to this idea too. I mean, and I know a little bit earlier on this program, we had some of the officials on this network. I should say we had some of these officials on. This doesn't seem like they're anywhere close to striking a deal. So I do wonder how long this goes and sort of how we sort of mitigate the impact.
Well, a lot of people are getting ready to work from home, perhaps. But, what's interesting is that in the markets, working from home on Fridays may no longer be something you can do because trading on Fridays has become a lot busier. For portfolio managers, it's become the busiest day of the week because they need to prepare their portfolios for what could be market-moving news from President Trump over the weekend. They are de-risking their portfolios, in many cases buying treasuries and selling credit.
Yeah, and more importantly, though, this is also about the price action as well. I mean, there was always sort of this churn, and this is specifically when we're talking about the fixed income space, was typically you can buy things relatively on the cheap on a Friday and then roll that over into next week. And now that's kind of been upended. So a lot of folks are basically working a lot longer and a lot harder and a lot later on Friday to sort of set themselves up and prepare themselves for maybe what happens over the weekend.
May I make a humble suggestion to our investing audience?
What's that?
Perhaps maybe just buy another Bloomberg terminal for the vacation home. There you go. The place in the Hamptons.
You have no vested interest here.
Always
I would
selling.
suggest maybe that would help with this challenge of just always having the information, at the ready. So you can enjoy a 3-day weekend perhaps, but also be able to act on that info.
All right.
It's just a humble suggestion, guys.
I think our bosses love you, Tim.
Oh, well. Yeah. That's the idea.
And this is why.
Hey, guys, that is going to do it. Have a great weekend, everyone.
You too.
I think the band is getting back together next week. I do want to thank all of you. It is going to do it for our cross-platform coverage of the market close on Bloomberg TV, Radio, YouTube, and Bloomberg Originals. We will be back on Monday, same time, same place.